The carnage really continued at the bond markets as well today, and the fresh outflows, tight liquidity as well as the further tightening measures from the RBI weighed heavy on the sentiment as yields rose to a fresh high of 8.89%. Anirudh Ghosh joins in with more details on that. Anirudh, yields are at the highest point in quite a few years since probably August 2008.
Indeed, of course, the global cues as well as the kind of cues that have been coming out from the forex market have actually dented sentiment in a very bad way as far as the Indian bond markets are concerned. And as you mentioned, the yields at about 8.89%, showing an increase of about 40 basis points in just today's trade is something that's really worrying as far as bond investors are concerned. Remember that bond yields are directly, are rather inversely proportional to the price of these yields. So, of course, the price of these bonds are actually crashing at this point of time, and of course they've crashed by quite a bit. You don't normally see a 40 basis point hike in these bond yields during a day, so that's of course a very big concern. And if you look at the kind of cues that the market is reacting to, firstly the cues from the US, the fact that the Fed tapering may actually start a little bit sooner than expected, given the kind of economic numbers that have come out in the US yesterday. And of course we saw there US Treasury bonds also spike in yesterday's trade. The other thing, of course, is in terms of the rupee, the kind of outflows that we're seeing from both the equity markets as well as the domestic bond markets is something that's become a big concern. And lastly, of course, the fact that the RBI is just not letting up as far as its measures are concerned in terms of curbing liquidity in the system. That, of course, has hit the bond markets very hard. Also, we had auctions today that sucked out money from the system. About 16,000 crore rupees of auctions were carried out. Yields on that auction also were pretty high. We saw a yield at about 9.2% for the 2023 paper, which was auctioned today. Also, of course, we saw yields well above the 9% mark for 25-year paper also being auctioned. So clearly concerns that yields on the higher end of the curve also could be on the rise is something that's really giving the markets jitters. One really needs to wait and watch how next week pans out as far as the bond markets are concerned. But as far as this week is concerned, we've seen a huge spike as far as the yields are concerned, and that, of course, is something that's a big concern for the banks as well, who are basically on the verge of booking mark-to-market losses on the basis of these numbers that we're seeing at this point of time.